The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Welcome, folks, to the Money Masters Show. I'm your host, Steve Rhodes. Thanks so much for joining us. We've got the Dow trading down about 9 points right now. S&P off 2, Composite off 7. Small caps really not doing much here, off 76 cents right now. Our call-in number is 877-927-6648. Hopefully everybody out there had a great weekend. If you did have an extra day off like we did here in the office, I hope that you got some rest, maybe played some golf, did something nice. Of course, if you're up in the Midwest and North, it was a little bit cold to be doing those types of things. But it is the time of the year for folks to come down and visit the lower peninsula of most of those northern states out there, none other than Florida. If you do come, please join us here at TFNN, Suite 618 down in downtown Clearwater. We'd love to give you a hug. Bull hug, bear hug, doesn't matter. Let's go take a look at these markets here. Let's start off with the S&P 500 again right now. Traded out at 1483.60. So let's go see what is the S&P doing. Number one, if you're watching us on Tiger TV or you're watching in the den, obviously, you are seeing the charts that we are posting. If you're listening in on your mobile device, thanks so much for doing that. If you're listening on the radio, we appreciate that as much. You can always catch an archive of this show on Channel 10 as well. This show will stream live to your mobile device, your iPad, your Android device. Just go to the homepage at TFNN.com. Over on the right-hand side, what you will see is some little smartphone buttons, 3 phones. Click on that. You'll be able to stream this show live. So as we take a look at the S&P 500, let's go rip this apart here. Let's go take a look at some of the key things that we should be watching for. Number one, we're going to go ahead and draw the old horizontal resistance. As you know, when you break through a resistance area, old resistance becomes what? That's right, it becomes support. So as we take a look at the resistance line, and be willing to move it up and down just a tad here. You don't have to use the exact swing point high from September 14th out. That swing point high was 1474.51. Quite frankly, I prefer using something just a little bit below that and maybe just a little bit above the October 5th high of 1470, mostly because we can see price as it was moving in on January the 10th and the doji candles or small-bodied candles that followed on the sessions from the 11th through the 16th. That area really held as resistance. So we've got a tested area of resistance. What I do suspect is when we do see a pullback, that is the first area where we're going to get a clue from the S&P 500 about the pullback. Why should we be expecting a pullback? Well, number one, if you take a look at the bottom of the chart, you can see that it has truly moved into the overbought territory. Is it extremely overbought? No. But it's moved into that overbought territory where you certainly wouldn't want to be chasing the market, even though we had a breakout above a prior resistance level. Just simply too oversold. All you have to do is go back to this chart or any other chart every time that the, I see I'm changing colors out there. Every time that the market moves up into this level here and it says just simply be patient. Be patient because you're going to see some type of pullback. Or simply you move sideways. The overbought condition has to work itself off. It doesn't have to pull back. I suspect it will at a minimum pullback. And if you get a close, certainly, look, if you get a close back below the September 14th high, that questions the breakout entirely. Again, that level 1474.51, I would just simply say where you really would get a piece of information that the breakout was a false break topside is a close below January 15th. That's the most recent swing point. It's not that far from the highs of September 14th. In fact, the low is 1463.76. You get a close below that, and I say it was a false break. Now, of course, just underneath that area is really the swing point where you would expect to see the S&P at least stop, which is right around the January 8th level of 1451. So that is the first area of where you're going to get a piece of information with regard to whether this was a good break or not, topside. Now, as we take a look at patterns that are still out here, you don't have a bearish candle. Without a bearish candle, without a reversal signal, not that you can't take a short trade, but the market, the message of the market is not giving you the indication that it is ready to start moving lower. We've got some real good indications to be watching for it, but we don't have the indication that it is ready to move lower just yet. If we take a look at expansions of swing points, we'll go from the September 14th high to the November 16th low. What we will see out here is we'll see an expansion of 1.272 at 15.10.19. 15.10.19, you want to write that down on a pad of paper or some little note somewhere. You want to have that 1510 is really the only number you have to write down, with the S&P trading at 1484. If we take a look at A to B equals CD, we take a look at a 1-to-1, A to B, your A point is going to be November 16th low. Your B point is going to be the high from, let's see, 1448. That's the number. That's the December 18th high. That's your B point. Your C is going to be that low of December 31st out here. And if we take a look at 1-to-1, A to B equals CD, you're going to see the number of 1502. I suspect that is what the S&P wants to do. It wants to go spike the 1502 to 1510 area. That is likely where we'll see the extent of the move. That's where we should start to see a pullback. We would also see the S&P get into the extreme category of being overbought, and that is likely the target, the next target, somewhere in that range. Does that mean it can't start pulling back today? Well, no, it obviously can. I mean, you've got the market that has just broken through an area of resistance. You get a bearish engulfing candle today. You get a close back below September 14th. And then, as I said, you really get a close back below the level of January 15th, which was 1463. Then it was most certainly a false break topside. Now, the cool thing is, if you're not into trade, you've got all the parameters right here that you need to be paying attention to and watching for a piece of information. You don't have to buy if you're trying to buy at the bottoms, the bottom tick. You don't have to sell the top tick. In fact, you're better off just simply waiting for the market to give you the information. Yeah, then you just have to widen your stop. That means that your position size that you might take would be smaller tomorrow than it would be today. But that's okay. That's just good mathematics. That is good money management skills out there. So that is on our S&P 500. Let's go take a look at the NDX. The NDX is probably where we're going to get the next piece of information, with Google out with the earnings today. Apple right now is trading where it's up 81 cents. So Apple is not moving. You've got Apple out with earnings. The NDX 100, that's what we're looking at here next. Let me draw the line across the screen here. We've got and what we're looking at is the January 2nd level. We know that the NDX 100 has not been able to bust topside or bust to the bottom. In fact, the bottom, quite frankly, is really good support. The January 2nd gap up day is on, I don't have the volume up here on the index. We'll take a look at it on the Qs. What I can tell you is each pullback to test the low of the January 2nd level has been met with lighter volume, and also has rejected the price at the bottoms. Of course, we're taking a look at the gap. Yes, there's a gap out there. Do gaps get filled? Yes, they eventually do. But gaps are also your friend at identifying support and resistance, and also very helpful, because once you break through one of those areas, what happens? Old resistance becomes new support. Old support becomes new resistance. So it's very well clearly written out here in the Index 100. I suspect that we're going to get some type of piece of information today or tomorrow, with both Google and Apple out with the earnings. We can see here price, moving up towards the top of that range, early this morning, and can't bust it up. So what does it do? It tries to bust it down. So that's on your NDX 100. Let's go take a look at the New York Stock Exchange, as well as the Russell. If we take a look at the New York Stock Exchange right now, trading just slightly lower out here, as we can see in the New York Stock Exchange. I'm going all the way back, this little red line, this little red candle out here. Here's a number you want to actually write down on a pad of paper. It is the low of August the 17th out there, and that low is 9087.75. Let me make sure that I got that number right out here, because you really should write this number down on a pad of paper. August the 16th. I'm sorry, I knew that was the wrong number. It didn't sound right in my head. August the 16th. 8811.55. 8811.55. 8811.55 on that day, folks. On August the 16th, 2007, there was a set of celestial aspects that for the prior 200 years had always marked lows, had always marked bottoms out there. And once that area was busted through, that is what started the bear market. What we've got the New York Stock Exchange doing right now, it got up to a high on Friday of 87.92. Remember, the number is 8811.55, and that is where I suspect the New York Stock Exchange wants to get up into. You close inside that area, and not that you can say that we haven't had a bull market since 2009, because we most certainly have, but that will be an important point. Right now, you do not have any bears out here in the New York Stock Exchange. That's one thing you also want to be paying attention to and watching for, is some type of reversal candle inside the New York Stock Exchange. Today, you could get a key reversal day if, in fact, the NYSE closed below 87.3869. But so far, no deal. Let's finish this off by taking a look at the Russell 2000. We're taking a look at two of the stronger indexes out here. In the case of the Russell 2000, if we just take a look at expansions off of swing points, we would go from the high of September 14th out here. That is at the 868.50, down to the low put in on November the 16th, out at the 763 mark. What you can see here is 1.272, not that far away. That number is 887 and just a little, or 897 and a little bit of change. So far, the high in the Russell 2000 has been today's high at 893.33. Quite frankly, that's close enough for my work. Now, what you'll be paying attention is to see if you get a bearish reversal signal. Get a bearish engulfing candle today if you see it close below 88974. And that's not a phone number. Our phone number is 877-927-6648. Let's go to Mike in Miami. Mike, thanks for calling. Thanks for holding. How are you today?
Excellent. Thank you. How are you?
Good. Good. Are you a native of Miami?
I would say so. I've been there the last 20 years.
Okay, good. Did you go to the University of Miami?
No, did not.
No. Are you a University of Miami Hurricane fan?
I would say I should be. I don't follow the sports too much.
Oh, you don't? Oh, okay. All right. Well, what a great city. What a great city for energy. You know?
Yes, definitely.
I mean,
very
just
diverse. Yeah.
Yeah, just a. Well, how about stone crab? You like stone crab?
Yes, I love them.
Oh, okay.
You been there to Joe's?
Oh, absolutely. It's one of my favorite restaurants to go to. Now, do you go there? Do you get the hash browns?
I haven't tried them there. I've heard people tell me about them, but I haven't tried them.
Oh, you got to try them. You got to try them for sure. You want to take a look at RIM? Tell us what you're doing and how we can help you.
Yeah, I had a friend of mine tell me that they're going to be licensing out their technology, their security, and and he looked at Toronto Exchange yesterday and noticed how on low volume it had risen, the share price. So he said, Mike, take a look at it. If it goes up $1, most likely it should go up another $4 or $5. So what I did is I bought two long call option contracts, both on March, but one I think at a 17 strike price and one at an 18, and then I'll just sell them when they double.
Okay. So if we take a look at, are you watching us on Tiger TV by any chance, or?
Let me look. Let me see, Tiger TV.
If not, then go, at the homepage of TFNN, Mike, what you can do is you can catch an archive of this show, and I want to show you the RIM chart out here. So let me show you what we're taking a look at. And RIM has had one heck of a nice move off of the bottom here back on September 25th, 2012, when it was at $6.63, trading now 3 times that price in short order out here. But, Mike, if you can stay through the break, we'll come back. We'll take a look at the RIM chart. I'll teach you something to be paying attention to and something that you're going to want to watch. Then we'll go to Jim in Minneapolis as well. Dow is off 18. S&P is down 4. Composite down 10. We'll be right back, folks. Thanks so much for joining us.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and will be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to the Money Master Show. Dow trading down 16 points right now. S&P's off 3. And let's go back down to Miami to Mike. We're taking a look at RIM. The ticker symbol is RIMM. He's got some call options on this that expire in March. And right now it's trading out at 17.43. So you've got a little bit of time on this. So the first thing that we're going to pay attention to is the weekly chart out here versus the daily chart. And that's what I've got up on my screen. If you're listening, again, you can catch the archive of this show on Channel 10. So there's a couple things that I'll point out on the weekly chart for you. Number one, the first area where you would run into some overhead resistance is going to be the high volume bar from June 24, 2011. Now that price point, the low there is 25.82. So you just kind of put that down and jot that down on a pad of paper. Now we're going to come back and take a look at what has RIM done off of the bottom. And on the weekly chart, what we're taking a look at is, Mike, RIM made a low the week of September 28th out there down at 622. You had a nice little bullish engulfing candle. You had some follow through on the next session. And RIM makes a nice straight line move up. No bears from a weekly standpoint really inside RIM. In fact, what you did was you had a little, on a weekly chart, you had a continuation pattern to the upside when price broke above the October 5th close of $8.22. And as soon as you broke above that, you can see the continuation on into what we call the B point, which is the straight line move up all the way into the December 14th high, and that was at 1421. RIM has a bearish engulfing candle, pulls back kind of violently, if you will, with some volume, with $308 million on December 21st, the week of December 21st. But what it does, it really fights that off. It fights that off for the next 3 weeks. And then the last week, ba-boom, you've got volume coming in this thing. Now, the B point, we take a look at the price moving in making this lightning bolt pattern out there. And on a weekly chart or on a daily chart or any time frame, you want to be able to denote the B point, and that's where you see a reversal. That is the December 14th high, 1421. And you want to really note the volume out there. Well, 267 million shares is that price point. What does RIM do last week? It gaps up. It gaps up over it. In fact, the low was 1390. It didn't gap up over it, but it did gap up from the prior session for the week, and it does it with 380 million shares. 380 going against 267. On a weekly chart, this has a confirmed A to B equals CD up. The 1-to-1 of an A to B equals CD takes you to 1871. So 1871 is what you should be able to get out of this trade. Now, I think you could actually get more. Now, the problem is that on the weekly chart, it also has moved into an overbought territory. And I'm going to go back on the left-hand side of the chart for you, and you will see that it has a pattern when it gets up in that area where it has to either work that off by pulling back. But you've got a 1-to-1 A to B equals CD, and quite frankly, the weekly chart actually says this should get up into the $20.88 level. And that is below the area of where you would run into some turbulence, some overhead supply. But what you've also got to be paying attention to is the mere fact that on the weekly chart, this has gotten into an overbought status. And what I use for a definition of that, I just simply use the relative strength indicator, relative weakness indicator. When you want to be buying your call options, you want to be buying when you've got price down towards the low level of this indicator. Right now, you're chasing it. But it's okay. You've got a confirmed A to B equals CD up. You've got to be careful here, because if you go back and you take a look at the RIM chart on the weekly chart, when it gets up into these levels, it pulls back. And so, and it pulls back to move sideways, and where it puts in some pretty significant highs. Did that back in June of 2009, did it back in the December of 2011, and on the daily chart, it's really traveling in the extreme area. And it is making a higher high with less relative strength, and that's always a bad situation. So be careful with this trade out here. I would have rather have seen you try to chase it or get into the trade when it was down towards the bottom of that relative strength indicator. So I hope that helps you out.
No, that's excellent. Thank you very much. And why would you choose the RSI, although that is very good, the stochastics?
Because it's proven to me to be an excellent tool to add to these A to B equals CD patterns, to identify bullish and bearish engulfings, and to be able to go back and take a look at a chart and identify where it makes market turns. Now, what happens as it moves higher with either less relative strength or moves lower with more relative strength? So it's a great tool to add to your trading arsenal. Not that you can't use stochastics or what have you. This one is just a real easy one for anybody to take a look at, put on their screen, and to use to their advantage. So you want to really be careful. Look, in bull markets, things that are overbought can stay overbought certainly for a while, but really pay attention. Are you making new highs with more or less relative strength? And if the answer is less, it says look out. It's going to end badly.
Excellent. All right. Thank you very much for your input. And how do I see this recording at a future date?
Just go to the homepage of TFNN.com and click on Channel 10. You'll see the archive of this show. We come back. You bet. You have a great day. We come back. We're going up to Minneapolis, see how cold it is. We'll talk to Jim, taking a look at Boston Scientific. BSX is the ticker symbol. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, to the Money Masters Show. Thanks for joining us. Dow is down 22 points. S&P's off 4. Composite down 11. And let's go up to Minneapolis, Minnesota, to our man Jim. Jim, thanks for calling. Thanks for holding. How are you today?
Well, Steve, we're just staying a little bit in the deep freeze up here. Minus 15 this morning in Minneapolis.
Now that's without a wind chill, right?
Yeah, up on the Canadian border was minus 36 in Embarrass, Minnesota.
Oh, my goodness.
That's usually the frostbite capital of the U.S.
Is it? Oh, my goodness. Yeah, that is cold. That is cold. But in Minneapolis, so I mean, what a great city, the way that it is built, to be able to allow folks to be able to get around and almost feel like it's, other than, I guess, getting to your car, in between places, it's a pretty comfortable place. It's a great place for, beautiful city. And they really do it right.
Yeah, there's 8.5 miles of skyway, if you add it all up, that connects everything together.
Yeah, that is absolutely the way to do it. That's the way to do it. Well, thanks for calling. You wanted to take a look at Boston Scientific. How can we help you out? What are you looking at doing?
Yeah, I did a little grouper fishing with some stuff, at the end of the year, and I bought a little Boston at around the, I'm in around the $6 level, and just wondering if, it's been dead for several years, and I know there's been a couple upgrades. Fundamentally, what's it look like to you on the chart?
Sure. So we'll take a look at it in a couple different time frames. On the daily time frame, really in the extreme overbought territory, but candle-wise, the bulls have not, the bears have not shown up here. So no reason yet to try to get out of this. Again, in a bullish type market, things can move, into more overbought conditions, utilizing the relative strength indicator out here. So you just have to be careful on a daily basis. You might see some type of pullback out here, and you do have this high volume low that you've got to always be careful of back in July of 2006. But let's go to the weekly chart and the monthly chart, because they have a little bit better of a read on it. And as I take a look at the weekly chart, number one, on the weekly chart, it's up over a swing point. The most recent swing point was at May 11, 2012, 88 million shares out there, and that high was 638. And you got above it. First, you came into it with 105 million shares, so 105 going into 88. That's a beautiful thing. And then last week takes it out with 108 million shares. So you're up over that level. And the real resistance level on the weekly chart on this, Jim, is right here at the gap down with volume that this had going back to March 19, 2010. There were 562 million shares on the way down on a weekly basis. Now, the top of the gap, which would be the March 12th candle, that low is $7.64. And you can see each time that price tried to make it up there, meaning going back to the December 2010 time frame, to the March 2011 time frame, to the May 2011 time frame, that area acted as a resistance level. So I think that is where you're going to, and even on the weekly chart, it also is moving into the overbought territory. If it can continue this momentum, that is probably all that you would get out of this equity, is right around the 7 in change range, 720, 30, 740, something like that. And because that's where it's going to run into some overhead supply, and it's acted as a resistance point. So I think that's really where your target should be on the equity. If we take a look at A to B equals CD, which has more more importance off of a weekly chart, what you'll see is right around the looks like about 682, and it's at 672 right now, is your 1 to 1.618 A to B equals CD. Problem is that when you do that, oftentimes, a high percentage of the time, I'd have to look at Tom's book, but a high percentage of the time you see a reversal right in that range. The 1 to 2 is $7.24, so that really starts to get you up towards that level where you start to run into resistance. But the bears haven't shown up, so there is no reason to bail on this at all. So on the monthly chart, let me see if there was something here on the monthly that I took a look at. On the monthly chart, it shows that it's really running into some overhead supply right now. And that is, just take a look at the downdraft from March 31st, 2010, and the low there is 670, and it's trading at 672. That has volume of 1 billion shares to the downside, and you're coming into it. The month's not over, but you've only had 252 million shares, so it's way short on volume as it comes into that area. And that's what really the three price patterns show. So does that help you?
Yeah. I'm just like you said, looking for a near term. Put a stop tight underneath where we are now, and just kind of trail it up as we go. And then if it goes higher.
Yeah, I wish there was a good support level. The last volume you had inside this was on January 15th. And that low is 636. So if you're underneath that from a purchase price, as long as it doesn't close below the 636 level, you're probably okay on this thing. I wish that it, and you've got that confirmed. You got a confirmed A to B equals CD up on the weekly chart. You know where your overhead resistance is. I would say just don't let it close below the last time you had any volume on the daily chart, which is January 15th.
Gotcha.
Unless you get some type of outside day, some type of real reversal signal, then you might want to consider just taking your profits. Let it pull back and then hop in again.
Okay, and if you have a chance, I'm looking at ALU, Alcatel-Lucent.
ALU. I will do that after our next caller, okay?
Gotcha. Thanks.
Okay, thanks for listening, Jim, and have a great day. Let's go to Mark in Concord, Massachusetts. Mark, thanks for calling. Thanks for holding. How are you?
I'm fine, Steve. How are you? And a late Happy New Year to you.
Well, thank you, and Happy New Year to you as well. Cold up in Concord as well?
That's an understatement. It's not like Florida, and tomorrow's going to get worse.
Oh, well, come on down. Come visit us.
Well, if I do a couple of good trades, maybe we can do that.
Okay, all right, good. You had a question about the S&Ps.
I had a quick question. I listened to your last hour, and I just want to be sure I understand what you think the market is going to do. We're going to have a slight pullback here, and then we're going to go higher?
Oh, I didn't say slight pullback.
Oh.
No, when I was taking a look at the S&P specifically, I was identifying first areas of support. Inside the S&P specifically, in my opinion, if it closes below the last swing point, which is not too far below the September 14th high, and that level is 1463.76, we will have had a false break topside. There are, so in my newsletter, what I do is I identify divergent patterns in the marketplace, and I take a look at other correlations in the market, and there are some things that say just be really, really careful out here.
Well, that I did pick up.
Okay. So, this is now what the market has not given us yet is any kind of reversal signal. And what you really need, you need not only a reversal signal, you need a confirmation with the next trading session. And we haven't seen that. That doesn't mean that it won't happen today. In the S&P 500 specifically, it's very easy to make a case to run to the 1510, to the 1500 to 1510, just simply because of A to B equals CD patterns or 1.272 butterfly sell patterns. So I can easily see the market having one more punch higher, could be more than one day, but another punch higher to move up into those levels before it might give it up. But it's not so much the number or the pattern that's important. What's, in my opinion, is using those as your target areas and then looking for the reversal signals, waiting for the bears to show up, at least to give you the better indication in order to be able to take the other side of the trade. So you've got the markets moving up into the top of that relative strength, that area where we have seen markets either travel sideways or pull back. And in this case here, we've got some correlations in the market that just say, be careful.
Okay, that's fine. That explains it much better than I did.
Okay.
Last question, different subject.
Yes.
Are you doing this show solo now, or is Tom? What's going on with Tom and lack of thereof in this time slot? Tom is putting
people to work as we speak. So he's putting cash flow into the economy, and he's putting people to work. So he's out there buying properties. And folks, if you haven't had a chance to check out the white paper that Tom did on the homepage of TFNN.com, the bull market in Florida housing, go do that. If you qualify as a accredited investor, it might be something you'd want to take a look at, especially with your retirement funds, because there's no out-of-pocket there. And so the auctions that he's in, the auctions are taking place I believe they start around 9 or 9:30. So it just depends on what's going on with regard to the auctions that are going on out there. So in the meantime, I am flying solo. Usually Tom is in on Fridays because the auctions are kind of light on Friday in the marketplace. But he is helping go long America all the way. Okay, so probably for a little while you'll be doing this show solo. Yeah, that or maybe we'll find some other ways to add some other color to the daily commentary. But for right now, just flying solo. Well, what you can do, Steve, is send a little of that Florida warmth up this way in that Gulf Stream. We'd love to. We'll blow all our hot air up as far as we can to you. Okay, thank you, Stevie. You have a profitable day today. All right. Let's go take a look at the ticker symbol for Jim that he wanted us to look at was ALU, which is Alcatel-Lucent. So let's go take a look at that stock chart, see what it is doing. Give me a second here to actually go ahead and pull it up. So again, the ticker symbol ALU, it is trading out, it's up $1.68, or it's trading at $1.68, I should say, today. So as we pull this up on the screen here, give me a minute here. This stock chart not notated as well. So let's go take a look at ALU. Did I grab the right chart? I most certainly did. Give me a moment here to just refresh my screen, make sure that I've got all of the right data out here. And let me add a couple of indicators out here. Let me also see what kind of expansions or contractions we might be having here. So this thing here has made a 0.382 retracement off of a set of swing points, take you back to February of 2012. But let's go see what this is doing. You can see how Alcatel-Lucent got up into the extreme overbought territory, did that on January 7th, and right now all it's doing is traveling sideways to work that out. So that's a bullish thing here, that it is really traveling sideways and still inside that January 7th area. There's 41 million shares. Let's put this on a little bit longer term. We can also see that it's running into resistance. The resistance area here, just a little bit above it, closed above it just slightly for 1 day. That was the resistance area that was met by the downdraft from April 26th out here. This moved down with 138 million shares off of the session from April 25th. I did 29 million shares. Pretty wide gap in price out here. That window is open. The top of that gap, which has not been tested, is the time frame, is the price point, low of April 25th at the $1.87 mark. It's trading at $1.67 right now. Let's make a black line across there. Well, we can see the area here because it has gotten inside the gap a couple times. I'm going to I'll draw a red line. We'll make this red, and I'll pull this down. And we can see this is the area of resistance. So it's a tested area of resistance. It's a little bit above the high from the session of April 27th. That's why when you're taking a look at your horizontal support and resistance, be free to move it up and down into the area where you see the most amount of support or resistance. In this case here, it's really going to be up at about the $1.70 level. So you can see as price move, and that's an area that was tested here back in May 29, 2012. It was tested again back in June of 2012. And then you can see as price moved up there on January 7th, and the volume that it was moving up there with was 41 million shares. Really, 41 million shares going against 138 million shares. No wonder it does not have enough energy to bust it up. So what it is doing, it's gotten into oversold territory. It's just simply moving sideways. Looks to me like it wants to attack that area again. If it can close above the 175 mark, its next area of resistance on this is going to be $1.87. That is where it gapped down. This is going to need more volume as it works off into this supply line out here. That's on Alcatel-Lucent, and that was on the daily chart. Let's just punch up the weekly chart here, see if we see anything. You see a little hammer candle down here. This was nice back in October of 2012, and the nice little bullish engulfing candle. So support on this baby is 91 cents, the low of October 12th. That's the week of October 12th, 2012. That should be a strong support area. On the weekly chart, this does have some pretty nice volume here. The week of December 21st did 184 million shares, and then also 123 million shares on January 4th. So real support on this equity is $1.49. If it does pull back, I suspect that's what it will test, is the $1.49 area. You can also see it's really traveling. Here is that downdraft, 256 million shares on the weekly basis, traveling inside that candle. That is a big positive. That says the $1.98 could be where this would head to, and that's the high of April 27th. That was on Alcatel-Lucent. So we take a look at these markets here. Let's see things popping and dropping. Google's off $6 and change now. MasterCard pulling back $6. Let's go take a look at MasterCard. I think I've got that chart right here. And the reason why we want to pay attention to MasterCard is because that has been strength in the marketplace. And MasterCard has given us a number of bearish candles, gave you a little dark cloud cover on January 10th, a little bearish engulfing on January 14th. You had some pretty good volume on Friday's session. And that's what is being tested right now. The low there is 513.42. Volume so far today, 207,000 shares going into 1 million shares out here. Support on MasterCard. Next level support should be 501. Stay tuned, folks, for Basil Chapman. Following Basil is Victor Jones, Daryl Martin, David White, Ken Shreve, and the Tom O'Brien Show from 4 to 6. Thanks so much for joining us. Have a great day. Look forward to seeing you in the morning. Take care, folks.
Are Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Back, folks. I skipped the gun there. A little too early in pulling the trigger. I thought we were in our last segment, but this is our last segment, so this is great. But Basil Chapman, he will be up next here. And let's go take a look at the XLF, the financial sector here in the S&P 500. The reason we want to take a look at it is today it is tagging a swing point high. So the financial sector has been one of the strongest sectors here off of the November 16th low out there. Certainly a weak sector overall, but let's go take a look at it. We're going to take a look at it, and what I've done is I pulled the chart here back to the left-hand side. For those of you that are watching on Tiger TV, if you're listening again, you can always catch the archive of this show on Channel 10, and you'll be able to see the chart that we're looking at. The swing point is February 18th, 2011. The high there is 1720, and the low is 1710. Now, the volume at that swing point is 32 million shares. But what I want you to also pay attention to is the following session here, we had a downdraft with 102 million shares. So it's really that 102 million shares that it is really going after. And again, that price point is $17.20. So now we're going to fast forward. And you can see also as the market was up there, you can see it was also traveling towards the upper portion of that RSI indicator out there, letting you know that a retracement was certainly forthcoming. Of course, what we saw is that we saw the XLF move from the 1720 level down into, actually went ahead and made a low back in October of 2011, down at $10.95 out there. So quite a haircut. Let's go take a look at what the market is doing now. You can see also, notice how the XLF traveling up here, traveling up in the overbought territory. You can see the XLF right now at 1719. It has traded as high today as 1720. 13 million shares today. It's going to have enough volume, most certainly, to take on the 32 million shares, the actual swing point high, but you don't want to discount that 102 million share downdraft out here. Now, if the XLF does close below 1720, and you'd really like to see it get at least to 1721 and pull back below on less than 32 million shares today, you would have a failure on price and volume at a pretty significant swing point. If it gets up over on lighter volume, or even heavier volume, even less than the 102 million shares, said that the XLF can certainly move higher out here. But what the XLF is continuing to do, it's continuing to make higher highs on less relative strength out there. That never ends well when it does end. And how do you know when it's going to end? I promise you, the bears will show up. They will show themselves. They cannot hide, just as the bulls cannot hide. That's what candlestick charting is really all about. If you want to understand the message of the markets, and you really should, you should just, this is the Evelyn, if you want to take the, what is it, not Evelyn Wood, that would be speed reading. Of course, you'll get to that. It is the Rosetta Stone. That's right. If you want to take the Rosetta Stone edition of candlestick charting, if you click on my name or the Trader's Edge, click on the Trader's Edge, you'll see my name just to the right of it. In the middle section of the homepage of TFNN.com, you will see an all-day workshop. It's archived. You can get that. I think it's a cost of like $5.95 out there, and what you'll do is you can access it for 60 days. If you need more time, just let us know out here. But I will teach you everything that you need to know in short order. Which candlesticks to be paying attention to, which ones are support or resistance, how to actually trade them, and to help you to read the message of the markets, because that is what it's all about. So far, you do not see anything bearish other than knowing, and in the XLF, other than knowing that you are traveling in a territory where we see reversal start. It hasn't shown up yet, but we will see a reversal at some point in time here, and it will be signaled by a bearish reversal candlestick candle, or multiple candles out there. So that is on your XLF. And now it is time for me to officially sign off. And let's send a little white light out to Basil. I see he has been under the weather, struggling with that flu bug, and I certainly know what that is like. But I'm sure he's got so much energy. Let's just send him all that energy so he can get through his hour. Thanks so much for being here, folks, and I look forward to seeing you real soon. Take care.